Hey guys, welcome back to the channel. Happy Sunday. Hope you are well. Today's video is going to focus on why I believe. I've heard from many of you ask me questions around why I'm so bullish, why I have such confidence that Micron can achieve its price target. So I'm going to dive in today and talk about the financial metrics that give me faith in this company or give me belief in this company. I'm going to break down the reasons why the internal health of this company makes it the long-term pick for me. And I also want to talk about their long-term ambitious plan that they have of Destiny 40, of how Micron is working to shift themselves from being a semiconductor giant to shift themselves to being the permanent cornerstone of the global tech infrastructure that's built here in the USA. And it's those reasons why I believe in Micron. So we're going to dive into those topics. Before we do that, though, did anybody have a chance to see the USA versus Canada hockey match this morning? Do you believe in miracles? Amazing game. First time the USA has won gold since the 1980 match against Russia in Lake Placid. I was alive to see that match. Many of you may have been on the line as well, but if you haven't, it has been 46 years since we've won gold. I encourage you to just jump on YouTube and take a look at that final goal in overtime when USA scored and the joy that was on their face. It gave me immense pleasure this morning. It was awesome to watch that match. It was awesome to see them celebrate with each other. So go USA. Congratulations on winning the gold. Congrats to Canada as well. I know I have a lot of Canadian listeners. And Pablo, thinking of you specifically, I hope you weren't too disappointed, but congrats to a silver medal for you in the Olympics as well. It's a great accomplishment. But let's jump in and talk about Micron and why we feel that it can achieve the gold in the memory sector as well, why we feel the finances that they have right now deserves a gold medal and why it makes me such a believer. So let's jump in and look at that right now. Guys, I'm going to start over and just take a look at, I'm going to first call out that I'm going to use FinViz for viewing the metrics. You might look at something different like Yahoo Finance or Zax or any other tool. Just know there may be some small differences in the numbers, and that's based on the time frames that they use. Yahoo Finance, for particularly, uses a lot of 5-year expected numbers when calculating their metrics. FinViz uses a bit of a shorter time frame, and I wanted to do that intentionally just because the boom is so big right now with memory and with the AI in the AI world right now that I wanted a closer view to how the company was performing and what we expect over the next 24 months. But there's 4 areas I want to discuss. I'm going to pull up this table that has a lot of numbers and metrics on it. But there's 4 pieces I want to discuss overall for Micron. It's the growth explosion that they have. It's the efficiency of the company. It's how they're building this financial fortress for themselves. And then ultimately it is the valuation gap that we have for the company. So first, let's dive in and just talk about the growth. And it's easy to talk about the revenues. I don't want to do that, but you can see in the first column, the 4th or 5th one down, sales of 42 billion in the last trailing 12 months and the last time they reported. But we do expect revenues to be about 60 billion for Micron in full year 2026. Amazing growth. But I want to talk about earnings per share, and I want to talk about sales trailing 12-month growth overall. So I've highlighted those in the 3rd column here. We'll start at the bottom. You can see that sales year over year, trailing 12 months is about a 46% growth rate, 45 and a half, we'll call it. And when you couple that with a earnings per share of this year of 300%, guys, that is a rare combination for a size of company like Micron. Remember, they're almost $500 billion in market cap. But to have a strong double-digit top-line sales number, growth number like we see of almost 46%, you combine that with a triple-digit, very strong 300% bottom-line number in earnings per share, that is a rare combination for a company of this size. And it shows us that they're not just selling more chips, they're doing it in a fashion that is driving significantly more profit for the organization as a whole. But I also want to just look at what we expect next year. So top of that column, you'll see the first thing that I've highlighted, which is earnings per share next year of almost $46 a share. I think that's kind of low compared to what I see a lot of analysts said, but it does show us that the earnings are continued to expected to climb and grow even over the top of the 300% that we saw this year. That is a very strong signal for a long-term view on Micron. It gives me long-term belief in the company. Now I want to jump over to efficiency. This is what Micron is historically known for. They are the efficiency king in the memory marketplace. They drive significant margins, and that's going to be on the 4th column over here. Gross margins, which I don't have highlighted, but that's what they're known for, is almost 46%. But I do want to focus on these top three. So return on invested capital, return on equity, and return on asset. All of these numbers are elite numbers for Micron. So return on invested capital of almost 17% tells us that it tells investors that for every dollar that Micron reinvests into factories, into fabs, into R&D, it's generating a healthy double-digit return for the company. It is a hallmark of a well-run organization, a well-managed internal operation, and a very strong leadership team. Think about the investment they have right now. We know they've committed $100 billion to a mega fab in New York. This high return on invested capital is critical for Micron. It tells investors that Micron has historically been successful at turning this massive infrastructure investment or massive investments they have into actual profit. So it should give us confidence that they will take that investment and, again, follow suit from what they've done historically, what we expect them to do moving forward. Also, the return on equity of almost 23% for Micron is a great sign for us as investors as well. It's showing that and proving that they are yielding high returns for their shareholders, specifically for the money that's invested. They're driving high returns back for those dollars. And anything in over 20 in this benchmark is considered an excellent number for the health of an organization. The last piece, just on efficiency, I want to talk around is the operating margin. You can see it's the last one column highlighted in this column of almost 33% for Micron. They are significantly outpacing peers in the sector. So if you think about their storage peers, just a pure play company like Seagate or Western Digital, Seagate Technologies has a operating margin roughly about 26%, just under that, and Western Digital has an operating margin of just under 28%. So this proves that Micron is significantly more efficient. They are way more efficient than those pure play makers that we see, whether it's the HDD side or even the NAND side overall, other players. And this is one of the reasons why I love Micron. It makes it a top choice for me. And I've shared it in comments, is I love the diversification of their product mix. They're not just focused in one area. They're focused across many aspects of advanced memory. And another thing I love about the leadership team, what they've recently done, is they've shifted away from some of the consumer products. And there are concerns with that. There will be higher prices, but it's a smart move strategically for them to open up factory space where they are traditionally driving more RAM consumer-based products, to move away from that and shift that factory space to higher profit products like high bandwidth memory. Great strategic move. It's the right move to do in this moment. It's the right move for the company to drive more revenue in the marketplace. So another sign that the leadership team understands the environment they're in, and they're willing to make strong decisions to position the company to be successful over time. The other piece I'm going to drive in next is looking at their liquidity overall. So this financial fortress, I'll call it, which is really a look into the liquidity and debt for the company. And I've got that highlighted at the bottom of the second column. I want to focus on the current ratio, the quick ratio, and then ultimately the debt to equity ratio. And for those on the line, we know we look at current and quick ratios. It's a strong measure of liquidity overall. And for a current ratio of 2.46 for Micron, that is telling us that they have more than twice the amount of cash and assets on hand, or what would be needed to cover their short-term liabilities today. Strong number. But then when we look at a quick ratio of 1.78, which is a stricter version of a current ratio, we know this is just saying, can a company cover their short-term liabilities with the most liquid assets they have, excluding inventory? Anything over a 1 in this metric is ideal for a company. So for Micron's 1.78, it reveals to us that in the event of a true emergency, they are positioned well to cover any short-term liabilities without having to sell any stock, any inventory, any assets at all to cover that debt. When you combine those two numbers with this debt to equity, of this debt to equity of 0.12, when you combine them together, it's essentially giving us a signal or a sign that Micron is internally bulletproof. They are not over leveraged, and they can easily weather any temporary shutdown or cooling in the memory world. We know that memory companies right now are printing money. They are meeting that demand in the marketplace. Supply is outsold through this year and into the next year. They're negotiating contracts, but right now they're printing money. But Micron is maintaining a leaner debt profile compared to many of their peers, particularly the ones in their storage peers that I discussed earlier. And that low debt to equity ratio that they have is essentially an insurance policy for Micron. It means that in the event that there's a cooling or a price reduction, a company like Micron that has the lowest debt, they'll have the ability to survive the longest. A great sign. And then finally, I want to talk about at the top of that second column. I have the two areas highlighted, which is the forward PE as well as the PEG ratio. So forward PE, we've talked a lot, but that 9.32 is incredibly low for a tech leader like Micron. But what's even more impressive is a PEG ratio of 0.12. Like anything lower than a 1, guys, generally is a strong sign that the company is significantly undervalued. So a PEG ratio of 0.1 or 0.12 for Micron suggests that the market has not fully priced in the massive earnings that this company has shown on its financial documents. And for context, when you compare other semiconductor leaders in this space and what their PEG ratio is, so NVIDIA right now is a 0.49, AMD is at a 0.39, and Broadcom is at a 0.62. So Micron with a 0.12, as I mentioned, is basically saying that the stock is trading at only about 12% of its growth rate. And when you compare it to NVIDIA's, which was a 0.49, you can make the case that NVIDIA right now is nearly 4 times more expensive than Micron when you adjust for how fast their earnings are growing overall. So guys, those are the reasons when I just dive into the financials that give me belief in Micron today. The growth catalyst or the growth explosion they've had, the efficiency that their leadership team has shown and proven over time, the financial force and that low, the liquidity and the debt that they have and how they're managing that, and ultimately the valuation gap. Those are strong metrics for today and moving forward on why I believe. But the other reason I believe in Micron and what I want to talk about is the Destiny 40 ambition plan that they have. Now, many of you on the line may not have heard the term Destiny 40 because they don't advertise it. It's not something they share in any type of public or investor discussion. It really is probably people like me and maybe like you that have coined their ambition overall, what they have into this term Destiny 40. But what it means is Micron has a goal of achieving a strategic aim or their long-term ambition of having 40% of the DRAM memory output produced here in the US. And we know for decades that the advanced memory manufacturing has been concentrated in Asia. And the United States, despite inventing most of the semiconductor technology that we use today, we have gradually ceded production dominance to overseas companies. But Micron is trying to reverse that trend in a way that's almost unprecedented. So it is really simple in concept, this Destiny 40, but it's massive in scale. They intend to produce, as I mentioned, 40% of its DRAM output in the United States over time, and they are so strongly committed to it. They are spending or committing $200 billion to achieve this goal of long-term U.S. investment. So $150 billion of this goal, of this capital, will be targeted towards building advanced memory fabrication facilities. And the other $50 billion is earmarked for research and development to maintaining technology leadership in both next generation DRAM, high bandwidth memory, advanced packaging, and other AI memory solutions. But let's dive in and take a look at the first pillar for Micron on Destiny 40. And it's all focused on the transformation that's happening in Boise, Idaho. This is where Micron's historic home base is. And the company is building a leading edge DRAM fabrication facility, which is adjacent to their existing R&D center today. Construction is already underway, and memory production is expected to begin in the 2027 timeframe. But a second Idaho fab is also planned. They are planning to follow. Their goal for Micron is to create this dual fab ecosystem in Boise, Idaho, that is designed to scale cutting edge nodes domestically here in the U.S. But Idaho is just the beginning. They also have that $100 billion investment in Clay, New York that we've talked about. That is what they're planning there is the largest semiconductor manufacturing complex in U.S. history. The site has room for up to 4 leading edge fabs with a total investment reaching, they'll reach over $100 billion in the next 2 decades. Each clean room they have there could span over 600,000 square feet with a staggering scale of advanced manufacturing. On top of that, though, what also doesn't get a lot of news is what they're doing in Manassas, Virginia. Micron is expanding and modernizing their operations to support specialized DRAM production, particularly for automotive, aerospace, defense applications, and industrial markets, sectors that not only demand reliability, but they really require supply chain security. So Micron is partnering with the U.S. government there to ensure for some of those applications that we can build it here and we can ensure that there is no risk to our defense when it comes to memory products. But let's be clear, guys, overall, this is not going to be an easy goal for Micron to achieve. Destiny 40 is very ambitious. Building leading edge scales will cost tens of billions of dollars. It'll stretch construction timelines, will stretch years, not maybe even decades. Workforce training pipelines must be built from scratch, and the cost for producing in the U.S., both labor and infrastructure, is significantly higher than it would be in Asia. But this is where the U.S. government comes in and helps through the CHIPS and Science Act. Micron has secured billions in federal grants, and they have access to investment tax credits. These incentives, they won't eliminate the risks for Micron at all when they want to achieve Destiny 40, but it does significantly reduce the cost differential between U.S. and overseas production. But the 40% figure that they put out is not going to happen overnight. As I mentioned, this is a multi-year, potentially multi-decade transformation for Micron. But if Micron executes, it just won't be a memory supplier. It will become the backbone of U.S. memory manufacturing. And it changes the outlook for the company significantly, both economically, technologically, and geopolitically. For investors like myself and maybe like you on the line, Destiny 40 is the Micron's plan. For Micron's plan is all about positioning themselves at the center of AI infrastructure and ensuring and securing long-term supply resilience. This is a bet that the memory demand remains structurally higher. It's a bet that AI keeps scaling, and it's a bet that domestic manufacturing will matter more in the next decade than it did in the last decade. The risk or the question we should be asking investors isn't whether the ambition is too bold. It's whether we believe Micron can execute at this scale. Because if they can, Destiny 40 may be remembered as one of the most consequential semiconductor shifts in the 21st century. Let me know what you guys think. Those are the reasons why I'm a believer in Micron, both the financial side and the long-term ambition that their leadership team has. I love to see those type of confidence and ambition that companies and leaders put out into the market. So that makes me a believer. But what makes you a believer in Micron? Drop it in the comments below. And I hope you're having a great day, and I hope you enjoyed the video. Take care.